Turkish Airlines presents Business Africa.
Hello and a warm welcome to Business Africa. I'm your host Nadia Bane. The top stories this week. During the recent IMF World Bank meetings, Africa's role in the global economy has come into sharp focus. The continent faces a complex set of challenges as aggressive interest rate hikes across the world have created a funding crunch for African nations, underscoring the urgency of exploring alternative approaches to foster economic development. A recent report highlights the evolving supply chain dynamics and the outlook for the continent's exports. As Africa seeks to tap into global markets, we explore the key factors shaping its trade landscape and the implication of its economic growth. In the Gambia, exciting financial developments are making headlines. The nation has recently made strides towards economic growth and expansion, with a focus on capital markets and tourism as the government plans to launch a stock exchange. Africa stands at a pivotal crossroads, grappling with political instability, climate change, and the urgent need for economic development. With a youthful population, the continent is becoming an attractive consumer market, drawing attention from supply chains worldwide. Amid these issues, one question remains: can Africa fund its economic development, and how?
Africa faces the challenge of mobilizing sufficient resources despite substantial growth in development finance due to limited external assistance and commodity price fluctuations. To address these, development analysts propose the creation and instrumentalization of domestic finance instruments, including remittances, mineral earnings, central bank reserves, carbon finance mechanisms, and the growing private equity market. Africa must achieve a 5% GDP growth rate the next 2 decades to raise funds domestically, according to the World Bank. The IMF anticipates steady economic growth increasing from 3.7% in 2022 to 4.5% by 2027, even though inflation remains above 10% in some 15 African countries in 2023. Meanwhile, Africa's diverse potential has attracted manufacturers looking to diversify production, driven by abundant critical minerals, a tech-savvy youth population, and support for the African Continental Free Trade Area. To fund projects, Africa explores carbon finance mechanisms, including carbon taxation in some countries, to mobilize resources and address climate change challenges. Additionally, innovative financing mechanisms introduced by the African Development Bank and collaboration with external sources like BRICS offer alternative means to support Africa's ambitious development goals.
Joining us for more insights is Jean-Marc Kilolo, economist at the United Nations Economic Commission for Africa. Mr. Kilolo, welcome. Can you please tell us how African nations can mitigate the impact of economic pressures and geopolitical tensions and other international challenges to their economy?
We know that Africa and African economies in general are vulnerable to international shocks. In particular, the price of raw materials. We know that the modern sector of the African economy has not developed on local initiatives, but to meet external needs. So we need to think about structural change, about economic measures that will reduce Africa's vulnerability to external shocks. For Africans or African economies, this means transforming their raw materials and creating value, because it's industrial value that creates wealth and creates jobs that will enable us to meet the objectives of sustainable development, in particular the fighting against hunger and poverty. Broadly speaking, I think the most important challenge today, or at least one of the most important, is to reduce the dependence of African countries.
Can African countries fund their own development, and if so, how?
We have solid institutions in Africa, in particular the United Nations Economic Commission for Africa, which is working to strengthen the capacity of African economies to finance themselves through financial innovation. The idea is not for Africa to live in isolation. Africa should take full advantage of the global financial sector. African countries need to be able to raise funds on world markets to meet their enormous development financing needs. That's the first point. The other point is innovative finance. How can we develop financial engineering that will enable Africans to draw on internal resources, some of which are dormant? In the case of DRC, what are we seeing? Financiers have told us that approximately $12 billion in raw materials are not being used for development purposes. So we need to think about financial engineering to enable African countries to make use of the mana lying dormant in the economies. Can you imagine $12 billion? That's a lot of money.
Imaginez-vous 12 milliards de dollars. C'est énorme.
What actions or strategies can African nations implement to assure a growth in the economic department and to assure their own autonomous economic development?
Il faut rassurer
We need to reassure international investors and operators. What we must avoid at all costs is the possibility of them dismantling, for example, the little industry we have in Africa and setting it up elsewhere. That's why I'm calling for a platform, consensual, one that demonstrates the economic benefits of integrating nationals. But we have to make sure that these nationals are trained. We advocate an approach that is more of a federating approach to demonstrate viability. And because we lack the skills, we need to ensure that there is a harmonious transfer of skills.
Il faudrait s'assurer qu'il y ait un transfert de compétences, qu'il se fasse de manière harmonieuse.
Mr. Kilolo, thank you for your time.
Thank you very much.
In today's global economy, African nations are poised for a significant transformation in their export and trade landscape, as reports suggest $1 trillion in exports expected by 2035. Have a look.
New data shows a steady rise in Africa's exports, indicating its increasing role in global trade. This presents opportunities for African nations to bolster their economies by diversifying their exports and tapping into international markets. The report by Standard Chartered anticipates Africa's total exports reaching $952 billion by 2035, with the potential to increase this figure by 29%. Additionally, it shines a light on how enhanced intra-regional trade and improved connectivity will create fresh avenues for economic growth across the continent. African trade routes linking with dynamic global regions are predicted to outpace the global average growth rate of 4.3%. The East Africa-South Asia corridor stands out with a projected annual growth rate of 7.1% until 2035. Moreover, the Middle East-North Africa and Middle East-East Africa corridors are set to play a vital role, with their combined trade volume expected to approach nearly $200 billion by 2035. Africa, however, still grapples with substantial hurdles in achieving its trade potential. The African Continental Free Trade Area has taken steps to address these, including the implementation of a reporting mechanism and guided trade initiatives, as well as shining a light on the vital role of digitalization in boosting intra-African trade.
Gambia is set to achieve a significant milestone by launching its first ever stock market just after debuting its first capital market. This historic event paves the way for a host of new financial opportunities within the country, creating an attractive environment for investors to participate in the nation's economic progress.
Gambia is set to inaugurate its first stock exchange, aiming to broaden funding avenues for companies within the West African nation. Escalating borrowing expenses in developed nations have made it challenging for emerging economies to access global capital markets, compelling them to explore alternative avenues for financing. Currently, businesses in the Gambia primarily depend on loans and grapple with steep interest rates, reaching as high as 20%. Sidi Keita, Minister of Finance and Economic Affairs stressed the significance of introducing innovative financing methods alongside ongoing government reforms designed to strengthen public financial management, all the while recognizing the challenges within the financial system that impede the progress of productive sectors. He specifically noted that despite the Gambia having more than 13 commercial banks, the private sector still struggles to access sufficient credit facilities, with less than 10% of deposits being provided a short-term credit with interest rates exceeding 20%. The government is firmly committed to addressing these issues in order to cultivate a more resilient financial ecosystem that supports the private sector and propels socio-economic development in the West African nation. The country's flourishing tourism sector has played a pivotal role in the nation's economic resurgence. As a result, Gambia's currency, the dalasi, has become one of Africa's top-performing currencies, further reinforcing the nation's economic outlook.
That's our program for this week. Thank you for joining us. I've been your host, Nadia Bane. For more business stories and news, stay tuned to Africa News and africanews.com.
Business Africa was presented by Turkish Airlines.